My name is Jeffrey Kennedy and welcome to Elliott Wave Junctures. Today I'm going to spend some time talking about the Kennedy channeling technique. And it's a trendline technique I developed a number of years ago that allows me to identify and classify Elliott waves more easily. Now, as you know, there are two types of modalities with respect to wave structure. You have motive waves and you have corrective waves. Within the corrective wave family, you have zigzags, flats, and triangles. Each one of those patterns can be contained within parallel lines. For example, the price chart in front of you is a corrective wave. This is a zigzag. And if you draw what I call a corrective price channel, you'll see that it is indeed contained by parallel lines. So one of the key tenets of the Kennedy channeling technique, or KCT, is that corrective price action, counter-trend price action, tends to be contained by parallel lines. So by default, if price action is not contained by parallel lines, then odds favor the move being an impulsive wave. For example, let's take a look at an impulsive structure. Here we have waves 1, 2, 3, 4, 5, just a classic Elliott wave impulse move. Now let's look at it from channeling technique, or the KCT. The first thing we want to do is draw what I call a base channel, and that would be this channel right here. We begin from the origin of wave 1 to the extreme of wave 2, and then take a parallel of that line off the extreme of wave 1. This forms a base channel. And then at that point, what we can then do is identify the upper boundary line of the base channel. And the reason this area is significant is because travel or trading through that upper trend line confirms the presence of third wave price action. Because until prices penetrate above that line, the whole structure is still contained within parallel lines, and it still could be a counter-trend price move. At this point, we now have confidence and clarity that we are indeed rallying in a third wave move. The next channel you'll draw is what I call the acceleration channel. That goes from the extreme of wave 1 to the extreme of wave 3 off wave 2. The importance of the acceleration channel is that whenever the lower boundary line of the acceleration channel is penetrated, it signals or confirms that wave 3 is complete and that wave 4 is indeed underway. At that point, we draw our deceleration channel. That defines the parameters of wave 4. Moreover, if we go back and look at the base channel, what I find utilizing this technique is that the trend lines which form the base channel often provide support for wave 4. And then when wave 4 is complete, on a break of the upper boundary line of the corrective price channel or the deceleration channel, then we see wave 5 develop. The idea is very simple. If you have three waves, you typically can only draw one price channel, and that signals that that price move you're examining is a counter-trend price move. If you're looking at 5 waves, then you should be able to draw clear 3 channels to it. So 3 waves, 1 channel, 5 waves, 3 channels. Now let's look at this on a real price chart with respect to the yen. Okay. Now the first thing I want to do when I look at this price chart is I see the current advance up from that June low. Well, what you have there is a move to the upside, which is indeed contained within parallel lines. That's a counter-trend move. Thus, we can expect it to be more than fully retraced. Now the move to the downside, what I primarily want to focus on is this structure right here. What we have is an unfolding 5-wave move. Moreover, by penetrating the lower boundary line of the base channel, that confirms the presence of third wave price action. So odds favor the interpretation here being most likely 1, 2. This is a wave 3 sell-off, and that's confirmation comes from the break of the lower boundary line of the base channel. Then you have our wave 4. Notice how the trend lines, which consist or make up the base channel, actually act as resistance for the wave 4 counter trend move. So I'll be looking for further decline in most likely wave 5 of 3. These trend lines allow me to confidently label the short-term structure in the yen as this: WXY, this being a counter trend move, again contained by one price channel, and then the subsequent move to the downside. Because of the lines, we can confidently identify this as waves 1, 2, and still unfolding in wave 3, and we'll most likely see wave 5 of 3 develop next. The Kennedy channeling technique, I've been utilizing it for over a decade, and I continue to find it as reliable today as I did when I first developed it. Thank you very much, and have a great day.